Okay, on the weekly chart, there's the only thing really to see is how we have maintained the 2020 ascending trend line, and we're back
Sheldon,
above.
just 1 second.
Go ahead.
Are you sharing a screen?
Yes.
I don't see it.
No,
No, I don't see it.
that's weird. I'll try again.
Should I stop sharing?
Maybe.
Because usually when you share the screen, mine
Yeah.
just snaps off.
You
Yeah,
see
I've
it?
stopped sharing. Yep,
Yeah.
I see now.
Okay. Yeah, here on the weekly chart, not too much to see other than the fact that we continue to hold the 2020 ascending trend line. We're above the upper trend line of descending triangle, which is all positive. On the daily chart, also a very constructive situation. We thought 13 consecutive up days, which I believe is a record for Ethereum. In that time, we traveled about 46% as of yesterday, which is an impressive rally for the second largest cryptocurrency. We took out the, as I said, the upper trend line of the descending triangle. Today, we're pulling back out, finding resistance at the daily cloud. Looks like we're going to at least touch the upper trend line of the descending triangle. I personally don't want to see that get to be too much more than that at this point. Otherwise, we're going to be down into testing the ascending trend line from 2020 and then the 50-day simple moving average, the 200-day simple moving average, which comes in at 2160. I mean, anything below that means that we have something else going on in terms of either a different bottoming process, or in fact, this was a dead cat bounce and we're resuming lower. Of course, daily close below 1700 would have to happen before we could confirm that in terms of a resumption of the downside. On the upside, really, as this consolidation takes place above here, you can see it can drift down because of the trend line of the descending triangle. Really, the next upside target is around 3000, which corresponds to the May 20th high. In this area, there's a congestion around 2900 to 3000. So that makes sense in terms of the psychological importance of 3000. After that, there's really not a lot standing in the way besides obviously the Fibonacci levels, but in terms of levels within the price structure over here, there's really not much standing in the way of Ethereum coming back and retesting 4384. I think for now, the ideal situation is we see a correction in time versus price, release the price compression that's been generated from this rise up, maintain the momentum, and then extend higher. Of course, I think Akash probably could talk better more about the London fork and everything related to that moving forward and how important that is for Ethereum, and I think how it's been anticipated in the context of this price run right now. It's important to note that even over the last 52 weeks, we're still up over 500% on Ethereum, which was a bit of a surprise when I first looked at that. Another thing that stands out, most importantly, and for closing purposes here, is that Ethereum, unlike a lot of the cryptocurrencies, is in an ideal situation in the price structure. What that means is it's above the 50-week simple moving average by a lot. It's above the 2020 ascending trend line, is above the 200-day, it's above the 50-day, and above this descending trend line of the descending triangle. So it's in a very constructive position. It doesn't have the weight of dealing with a declining 50-day moving average has already triggered a death cross pattern, and it's not having to deal with lows from the May collapse, which is inflicting some resistance on some other cryptocurrencies. So it's in a position where there's not a lot of overhead resistance moving forward. That's all.
Yeah, I think the London hard fork definitely had a part to play in this run up, especially from here, right? Like this particular congestion that we see here is where Bitcoin kind of stopped. Actually, it was on August 1st, if I remember correctly. Yeah, so this is where Bitcoin stopped rallying. but Ethereum kept on rallying. This particular bit, I think, had to do with the London hard fork. Right. Either way, right now I think Ethereum is in a really good position, considering these particular small candles here are forming a really good demand zone, and this kind of coincides with the swing high that was formed here on June 17th at 2460. Right. So this seems like a really good place to bounce, or like get a relief bounce over here. But I think, as I pointed out in the last session, right, it's forming a W pattern here, and we've swept the liquidity resting above these swing highs here. So I think we're gonna play out this structure here again, uh, get a blah blah blah, something like this, and then go over here. So this particular red band here, which extends from 2898 to 3017, is a really good place where a lot of liquidity is resting. So the next target for the bulls would be 2898 to 3070. Right. So beyond this, I'm still looking at 3240, but I think the first it's important for us, for Ethereum, to actually move past this particular zone here. Anything about 2650 would be a high resistance uptrend. So it'll be really interesting to see how this plays out, right? But for the short term, I'm looking at a retracement of the 50 fib, and in some cases 2271. And if I'm being a little bearish, probably 2174. But anything beyond this, I would have to be a little careful with Ethereum. Yeah, that's me.
I think it's, I'm not, or don't remember the exact date, but I think people should take the time to go look at your article that you did with regards to the London fork and the advantages it's supposed to bring to the platform. And that, when was that article? That was 2 days ago?
Yeah, I think it was on Monday.
On Monday, yeah. So I think people should take a look at that.